Good afternoon, everyone. I'm Moy from Stakeholder Management Market Operations. Thank you for taking the time to attend our Market Operations third industrial education program on the topic, Reading Stock Market Trends with Advanced Charts and Patterns Interpretation. On the line, we have Shane Chu from LifeChamp Sdn Bhd, our moderator, and David Loh, our speaker for today. Without further ado, I would like to hand it over to Shane to start the session. Thank you.
Good afternoon, everybody. Welcome to today's webinar brought to you by Bursa Malaysia. Our webinar session today is titled Reading Stock Market Trends with Advanced Charts and Patterns Interpretation. So my name is Shane Chu. I'm the moderator for this session. So in this webinar, we're going to learn how to read and interpret advanced charts and patterns. So before we begin, disclaimer, whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mention here. All right. So allow me to briefly introduce our speaker today. He holds the position of Managing Director at Top Infinity Sdn Bhd, which is a proprietary trading firm that focuses on trading a range of financial markets, including global commodities, currencies, equity indices, and financial derivatives. He has 25 years of experience in Malaysia's listed derivative industry. Before starting his own consultancy, he held leadership positions in futures brokering divisions of major investment banks in Malaysia. He served as the president of the Malaysian Futures Broker Association between 2018 and 2019. So he's none other than Mr. David Loh. So David, how are you today?
Fantastic, Shane. Thank you for that great introduction.
All right, I will stop sharing my screen and you can take it over.
Okay, thank you and good afternoon to everyone. Looking at that list of 252 people, I see so many old friends and old colleagues. Fantastic that you guys are still around and very active in the markets. Shout out to all those from Penang, Siapaboy, you know, in KL, Seremban, Selamat Petang, some from Batu Pahat. How are you guys doing? Okay, good to see you. All right, I hope you can see my screen now. Shane, is it looking good, my screen?
Yes, okay, we can see your screen.
Okay.
Fantastic.
So thank you. Okay, today we're talking about this reading the stock market trends with advanced charts and patterns interpretation. Okay, very long title. Okay, I have even more slides for you. Actually, I have 70 slides. Okay, but don't be afraid. Okay, don't be afraid. A lot of those slides are there because you'll be given this handout. Okay, after the session, so that you can go back and refer. Okay, because sometimes it's kind of difficult to absorb everything at one time. So a lot of those slides are for your reference. Right. Okay. So let's move on and get moving because we have a lot to cover. We are going to do something miraculous, and I think you can do it with me. All right. Normally, this course will take 4 hours. We're going to do it in 1 hour. Okay. All right. This you've seen already. Okay. You've seen this already. Don't talk too much about myself. Okay. And this is what you learn. Okay. It's very worthy. Okay, very worthy. There are 4 main points here. Okay, that's what we're going to do this 1 hour. Okay, but let me tell you what I'm going to do for you. Okay, at the end of this session, what you're going to walk away. Okay, if you pay attention. Okay, you are going to walk away with the ability to look at any chart, see the pattern in 10 seconds. Okay, recognize what trend is this chart in. Okay, whether it's a long-term chart or even if you you do day trading or even if you do swing trading. Okay, you'll be able to recognize the trend. Where are the trigger points? Okay, where the trigger points where the market is signaling for you to go to buy. Where are the points? Okay, that the market is signaling you to take profit. Okay, so that's what basically this lengthy page here is all about. Okay, that's what I'm going to do. If I achieve it at the end of this session, then I've done a job. And if you can do it, that means you've done a good job as well. Okay, so let's dive straight into it. All right, so this whole session we are talking about patterns. Okay, so what are the patterns we're going to talk about? Okay, we're going to look at some of the very famous technical classic chart patterns, okay? But we are going to reinterpret it with some new information, okay? And this new information is very important, and this is what we call fractals and fractals geometry, okay? What are these fractals and fractal geometry, okay? Big sounding names, sound like some rocket science thingy, okay? It's not rocket science, but it has a lot of science behind it. But basically, a fractal is a pattern that repeats itself and repeats itself infinitely, okay, regardless of the scale. Okay, this is interesting. That means in a smaller scale, you see the pattern. In a larger scale, okay, you see the pattern. In the infinite scale, you also see the same pattern. Okay, so whether it's zoomed in or zoomed out, okay, whether each part of the fractal looks similar to the whole image. Okay, so what you see here is actually a fractal image. Okay, and this is a very famous fractal image by the mathematician Benoit Mandelbrot. Okay, and he's a guy that coined the fractal. Okay, you can see here. Okay, so if you look into each of the smaller patterns in the bigger patterns, you see that actually it's repeating itself. Okay, even the smaller little, no, this looks like little cactuses or something, right? But this is actually a fractal formation. It is the small one within the big one and the big one within the bigger one. Okay, and of course you have this big shape over here. So that's what we're talking about in terms of what fractals are and what is fractal geometry. And these patterns all can be found in nature, right? If you look at branches of a tree, you look at the snowflakes, right? If you put it under a microscope, you will see all these patterns repeating itself, okay? Leaves, animals, circulatory system, including the human circulatory systems, river systems, all these are fractal in nature. Okay. Now, what has this got to do with the markets? Okay. So it's important because you want to apply it to markets, right? Okay. Now, in terms of fractal recognition, right? So these are the what we saw, snowflakes, leaves, and all that. This is a structure of nature. Now, in the financial markets, okay, the price charts, basically, if you're not familiar with looking at the price patterns, you may see, hey, no, this looks very chaotic, look very random, if you observe it from afar. But if you really genuinely take a closer inspection, then you can actually see, hey, that's repeated behavior, okay? So today, my job is to show you how to see that pattern, okay? That repeated behavior, that repeated pattern, okay? And their names for it, of course, right? So in every scale, what you see now on the right side, if you just see this 1, 2, 3, 4, 5, okay? This is actually the this is actually the Elliott wave. Okay, some of you who are very technically inclined or you've learned, this is the Elliott wave. Okay, 1, 2, 3, 4, 5, then an ABC correction. This is a Elliott wave formation. Okay, and you can see if you go down one level inside the 1, 2, 3, 4, 5, 6 ABC, there are other smaller levels of fractal or Elliott waves. And if you go down another level, right, you can see the same 1, 2, 3, 4, 5 ABC in a smaller scale. Right, so these are repeating patterns, and this has been observed by this brilliant guy called Ralph Nelson Elliott, okay, who the father of Elliott wave, and he saw these patterns, and it's repeating, in all sorts of commodities, it's repeating in all sorts of stock indices, and it repeats itself in stocks as well. Okay, that's what we want to do today. And the reason why it does that is because the human brain is fractal. Okay, the human brain is fractal. We are nature by itself. Okay, the way we think, the way we react to markets and emotions are the same, and it repeats itself. Okay, and that is also the basis of technical analysis, because it says that patterns repeat itself, right? All right, so let's move on. Okay, so that's the Elliott waves we've spoken about, and Ralph Nelson Elliott. We basically recognize that pattern that's repetitive, wave-like, okay, and basically the reason why that is so is because the human brain is a fractal organization. All right, so this is for the theory. Now we're going to jump straight to the action. Okay, so this is why you want to look at the fractals. Right. So in terms of looking at trend, okay, let's make it simple. Okay, you may think that this is very, very simple, but it's actually very, very important to recognize it. Okay, and those of you who are what do you call that in technicals and know the classic history of technical analysis, you know that this theory of higher high, higher lows in terms of an up trend is actually the Dow theory. Okay, so if you look at the Dow theory, it talks about this particular pattern, okay, of higher high and higher lows, right? And the reason why you can immediately see, okay, if you flash a chart like that, right, with this kind of pattern, you can see immediately because your eyes itself is a pattern recognition machine, right? Because you have seen it, you've learned it, okay, from young, right? You see ascending steps, you see descending steps, and this is basically how a uptrend looks like, right? And it is defined by higher high and higher lows, right? So this is very important to know. Okay, but there's another factor that we want to know even more important after this. This is a downtrend. A downtrend is defined as a prices moving successively lower highs and successively lower lows, right? So lower lows and lower high defines a bearish market, all right? So next is what? Next is a sideways market, right? What is a sideways market? Basically, a sideways market is a market with a quite well-defined high and quite well-defined lows, okay? So the highs and the lows are defining a range, okay? Now, for a trader like myself, okay, I'm full-time trading, I hire traders and all that, right? These are tough markets for us to trade, okay? We love to trade trendy markets, right? You also have experience, I think, all of you in the stock market, remisiers, dealers, you have been so many years. I come maybe 20, 30, 40 years in the business, right? I see your names right out there, right? You're still active, fantastic, right? So you've gone through the sideways markets, you've gone through the bear markets as well, right? Where no, there are less opportunity. And this year, of course, is fantastic year. 2021 was amazing, okay? And this year, since end of last year, was amazing hopefully amazing for you guys as well. Because why? Because we have a nice uptrend, okay? So sideways trend that we had over the previous year, the last 2 years have been pretty tough as well. No traders will find this kind of difficult to trade, okay, unless a particular stock has a particular dynamics or some particular market moving news that actually move it into a trend. So traders really don't like this kind of trend because it's not going anywhere. You try to buy it, it goes down, okay, and you try to short it as an index, okay. Some of you may be in futures, okay, we short it, then it doesn't go down and it goes back up, right? But what I want you to notice is this: if you find a stock, okay, or if you find a market that really goes on a very long sideways trend, okay, now the moment it breaks out, okay, of the high, okay, that is going to be a trend that is going to be very, very amazing, right? I'm going to show you a chart afterwards, right? So not to ignore, don't ignore, okay? You may have your favorite stocks. Don't ignore those stocks that have been lying there quiet, trading within a range, sometimes a lot of accumulating, especially if you see a lot of volume moving but it's still not breaking up the high. Take it as a sign, okay, that something is happening, and wait for that particular break out of the range, especially for the high, and later I'll let you know how to see the fractal. And once it breaks out there, it's a great opportunity, okay? And let me show you one chart that is something like this. Just look at this particular chart, okay? You are very familiar with my EG, right? This is a chart between what is the date, end of the last quarter of 2023. Okay, it's been sleeping a very well-defined range between 83 cents and then 76.5 cents, and it totally broke out of the range at the end of April, and you see the trend really moving up. Okay, so don't also ignore those what do you call that, stocks that actually have been sleeping for a long time, because once it breaks out, okay, it's going to break out into a very strong trend. Okay, and this is just one example of a breakout of that range, right? So okay, so we have recognized 3 types of trends, right? Uptrend, downtrend, and sideways trend. So it's very easy for your eyes to recognize. Now, the very important slides is going to come in the next couple of slides, okay? Now, how to recognize a turn, okay? This is very important. You can recognize the uptrend so easily. You can recognize the downtrend so easily, okay, including the sideways trend. Now, how do you know when the market has turned, okay? This is very important. The next couple of slides is very important to imprint that pattern in your mind, okay? So let's move on. Okay, reversal of a downtrend, and this is very important. If a particular stock or market has gone through a downtrend, right? So the big question, of course, when is this market going to turn, right? Okay, some of you and some of your clients maybe have been holding the stock for like a long time, and when is this stock going to come back, right? So this is a very important formation that you want to recognize with your eyes, right? So let's say on the left side, okay, before you come to this circle here, on the left side, evidently it's a downtrend, right? Successively lower highs, successively lower lows. Now, there's one point when the market wants to turn, it will do this trick, like you do this turn, okay? What it does is, okay, it creates a low, okay? Then it go and create a high, okay, a lower high like the previous one. And then the magic move is here. The magic move, it doesn't go down and break the low, right? So what's the definition of a downtrend? A lower low. Now, it doesn't go and break the low, but instead go and break this high, okay? And this is what we call a turning point, right? When prices make a new lower, what do you call it, lower high, okay, and a lower low, then fail to create newer lows, and then go and break this high. This is an important turning point, and this is the turning point that you'll be using later in the setup. All right, so this is how it looks like, okay? So those of you like who are in futures and perhaps you're selling this KLCI on a downtrend, okay? Or maybe you're trading palm oil, okay? So it's on a downtrend, down, rally, sell. Well, it's gonna work, but there's one point that it will not work, okay? And this is when it doesn't create no more new lows, okay? Go and break this high. This is where traders will stop and reverse buy, okay? This is the first sign that the trend has turned, okay? Then this is a very important pattern to burn into the mind, okay? So it takes a bit of practice, okay? It takes a bit of practice. When I first started this, looking at this some 30 years ago, okay, I failed to understand, okay, but then one day when I realized it, then I basically able to see it every time I see this chart, okay? And this is the 10-second thing you need to master, okay? Know where the trend is, okay, which is pretty easy, okay? Downtrend. Now, the turning point is where the difficult part is, okay? So because if you don't see the right side, of course, obviously here on the right side you can see, but if you're right over here, you may not be able to recognize it. And this is something that you want to burn into your mind. All right, so this is where traders will either take profits on their short positions, or then it's a trigger to go on a buy for this particular stock or for this particular asset, right? So that's a downtrend to uptrend. Now, okay, now we are on uptrend. Okay, you have a great market. Okay, it's going up. Okay, every time you buy, it goes up. Okay, it comes back down, retrace, you buy, it goes up. Okay, now, okay, so this is uptrend on the left side. Okay, successively higher highs, successively higher lows. Okay, and then you come to this point. This is where the music changes. Okay, you have the bull song here playing the bullish song. Okay, but here the song change. Okay, you must be able to recognize. A lot of people can't recognize. Okay, so the song change to bear song, they're still buying. Okay, come down lower, say very value cheap to buy. Okay, but it continues to go lower because the trend has changed. Okay, you need to recognize this. Okay, we're going to use it later, but then again you see the principle is this: it makes a high. Okay, come back down. Okay, similar to previous formation, but it doesn't go and make a new high. This is a very important distinction. It doesn't make a new high, okay? So when markets doesn't make new highs, that means it's either going to go sideways or it's going to turn onto a downturn, all right? So this is how you look at it, okay? It breaks this low, okay, breaks its low. That's where you take profits. Okay, it's time to take some profit, lock in some profits. Okay, and if you are perhaps in KLCI or in the futures, okay, you can actually go short as well. Right, so this is very important to recognize, okay, in terms of taking profits, because not only recognizing when to buy is very important, also getting out of the market, locking in your profits, or if your trade is wrong, how to get out is very important as well. Okay, so these are the two turning points that really needs to be burned into the mind. Okay. Right, later you can practice. Okay, so I give you a few examples over here. This is a snapshot of precious metal. Okay, in a line chart, you can see this wave behavior, right? This wave-like behavior, right? Wave-like behavior. Of course, there are the downtrends here as well. I didn't mark everything. Okay, there are the downtrends here. Okay, you need to train your eyes. My eyes are looking at this for over 30 years already, so it's very accustomed to it. Okay, another one, Axiata Group. Okay, you can see all these turnings as well. Okay, how it turns from uptrend to downtrend right over here. Okay, although I didn't mark it, you can see my cursor right here. Okay, as after you finish the correction, when do you get back to the market? Okay, then it gives it signal as well. So every time the market makes a turn, it makes this signal. It makes this move, right? So you need to recognize this move. This is a very important move. All these moves that I've circled over here is extremely important to burn it into your memory. All right. Okay, let's move on. Okay, this is Hibiscus Petroleum. Okay, anybody still holding this darling a couple of years back? Okay, of course, 2020 was its year. This is a weekly chart. Okay, long-term chart. Okay, this is where this particular stock totally exploded for 2 years upside. Okay, and then took a very deep retracement. Okay, almost half the gains it gave back, and then went to what? This trend is what trend? This is a sideways trend. Okay, so it's consolidating. So of course, in between you can find ways to profit from it. Okay, because this is a one single square is 1 month or more, right? So there are actually a lot of movements as well. So I want to tell you that although this is a weekly chart, okay, a weekly chart will define the longer trend. Normally, you define the trend by looking at the chart that the time frame, right? Let's say if you're looking at a weekly chart, then you are looking for a trend that can run about 20 times that time frame of your chart. Okay, so if you're looking at a weekly chart, then you're looking at the range trend of about 20 weeks. Okay, multiply that by 20. This is a good rule of thumb. Multiply it by 20. If you're looking at daily chart, then you're looking for a trend that lasts about 4 weeks. Okay, 5 trading days, 20 days, about 4 weeks. So it's about a month. Okay, and if you're looking for, say, a shorter term trade, okay, you're looking for perhaps a week, within a week you want to get into this, then you look perhaps at the hourly chart. Okay, or 4 hourly chart. Okay, so hourly chart will be if you say 20 times that. Okay, so basically it's about a 3 to 4 day trade, right? So that's how you determine which chart to look for in terms of what time frame you're trading. All right, so that's a tip for you. So let's now move to fractal nature. Okay, and I say the fractal nature is the master key to charts. Okay, so pattern recognition, we already said in nature it comes like that, and in markets also it repeats itself. Okay, but the thing is this: there's so many patterns. Okay, if you read this book later, I'll show you Bukowski, I think his name. Yeah, Bukowski. He is the master that wrote the Encyclopedia of Chart Patterns. Okay, there's some 10,000 chart patterns there in his book. Okay, his book is 1,000 pages. Okay, so hey, so many patterns, so many keys. Just like this bunch of keys here. Which one to open the market? Which one is the right key? Right? So I'm going to give you what? I'm going to give you the master key. Okay, forget about all those small keys. Okay, but we'll learn about it. Okay, but the master key is what? The master key, just now we said, is the fractal. Right? So this is a dragon guarding his very precious master key. So master key, I'm going to give it to you now. All right. So this master key is called the fractals indicator. Okay, and this came out in a book in the 1990s. Okay, very early 1990s. One of the first books on technical analysis I read, and it was a fantastic book. It totally took my career to a different level. Okay, and okay, it's very wordy. Okay, don't mind all that. But basically, what you see here, the red arrows and red arrows at the bottom here, these define the fractals. Okay, so what is the fractal? Okay, it's a very simple formation. Okay, if I put up my hand right in front of my face, okay, and I have my fingers right there, I have 5 fingers right here. Okay, for all those who are normal, okay, 5 fingers. The middle finger, of course, is the highest. Okay, and this highest finger right in the middle is called the up fractal. Okay, as you can see right there. So what is the up fractal? Up fractal is the bar with 2 bars before it lower and 2 bars after it lower, and that is an up fractal. Okay, so this is an up fractal. You can see like a finger. Now, if I point my palm down, okay, and then of course the bottom finger, my middle finger, the lowest one is the down fractal, because it's followed by two bars that are higher with higher lows, and 2 bars after that with higher lows. So that is a fractal. Okay, now do you need to recognize this with eye? Okay, if you don't have, when we first started, we don't have indicators that can actually do this, but a lot of the software, okay, provided by your TPs and your what do you call that, your brokers, okay, they already have this indicator called fractal. Okay, so if you click on the fractal, okay, you can immediately get the arrows up there. Right, so you don't have to worry about recognizing unless your system don't have it. Okay, so it's a part of an indicator which is already in your software. All right, if not, then some of you who are in what do you call that, in you have subscribed to TradingView, just go down right below. That's called Williams Fractal, and it will display all these arrowheads. Okay, we'll teach you how to use these arrowheads in a short while. Okay, so these are some of the fractals. Okay, this one on the top left is a what we call a pristine or perfect fractal, right? It can't be more perfect than this already. But in between, they can have this little different types of formation. Okay, doesn't need to be very perfect like here, but it's still a fractal. Okay, the software will still mark it as a fractal, and this is also a fractal. This is one bar that actually shares up fractal and a down fractal, because they have two bars on the left and the right, which actually have lows and highs, which are lower than the high and higher than the low, right? And this is another fractal as well. Okay, you can always refer to the reading materials later after this. Okay, but rest be assured, if you have a software, you can easily put the fractals on it. Okay, and those of you who are using TradingView, of course, this is one of the indicators that you have. All right, so identifying fractals. Okay, this is a Tenaga National weekly chart. From May of 2021 to May of 2024. Okay, so it's all defined this way. Okay, so I'm using TradingView. Okay, I'm not promoting TradingView, but it's a great tool as well. A lot of traders, my traders, use this particular software as well. Okay, but I guess a lot of your brokers will have the software with this particular indicator as well, right? So the green ones are the up fractals, the red ones are the down fractals. Okay, and all these fractals, if you join, okay, the green to the red, you will see the wave. Okay, and what wave is that? It will define what we call the Elliott wave. Okay, so that's the wonderful thing about fractals. It actually defines the Elliott wave. And what is the Elliott wave? The Elliott wave is the underlying structure of the market. So when you're looking at fractals, you're basically reading the code of the market. That's the underlying structure, right? Another one. Okay, this is from where? Okay, this is from 2013. Last quarter of last year to June of 2024, you can see a very nice and well-defined uptrend. Okay, so if you connect all these dots, okay, it will be the wave. It will be the up wave, right? This is another one. This hourly chart. Okay, just to show you, this is I go from weekly to daily. Okay, so weekly we have fractals, daily we have fractals, and hourly also you have the fractals, right? So that's why fractals repeat itself, right? You can put in a funny chart as well. You say, okay, let me put in a funny 1.5 hour chart. Okay, it will also display the fractals of the 1.5 hour chart. Want to put it in a 45-second chart, okay, you will also have a 45-second fractals. So that's the beauty of repeating patterns or fractals. Okay, so let's move on. So this is the KLCI, right? This is the hourly chart as well. Okay, you can see. Okay, later we do a very important thing. We need to recognize where is the buy trigger, where is the sell trigger. Okay, that's the important thing. So this is basically showing you how to identify the fractals. Okay, so it takes a bit of time. It will take about 2 weeks of dedicated practice, and I can assure you that if you take that dedicated practice, you will have it once and for all. It's like riding a bicycle. You know, the first time you will fumble, you will fall, right? But after a couple of times, in 1 or 2 weeks, you'll be very, very good at cycling, right? It's the skill. It's a skill to master recognizing it with your eyes. Okay, so this is the KLCI. Okay, now what I'm going to do with you now is going into what we call the classic technical analysis chart patterns. Okay, we are going to look at reversal patterns. Okay, and then we are going to reinterpret or re-look at it with a different eye. Okay, we're going to look at it with fractals. Right? Okay, so let's move on and look at reversal patterns. Okay, what are reversal patterns? Basically, chart patterns that predict a change in price direction. Okay, so over like 30 to 50, probably even 60 years ago, when these chart patterns came out, the technical classic chart patterns came out. Okay, they didn't decipher the fractal yet. Okay, they didn't know what was a fractal yet. Okay, because Bill Williams was the one that came up with the fractal in the 1980s, right? And also even Ralph Nelson was basically talking about the wave-like nature, right? So they haven't recognized the fractal. Okay, so they look at this patterns, okay, and they found that these patterns also tend to repeat itself, right? And reversal patterns predict basically a change in price direction. Okay, so let's look at some of the classic price direction reversal patterns. Okay, so we start with the very, very famous what we call the head and shoulders. Okay, so a head and shoulders is basically prices going up here, forming a head right out of the high here, and then two highs here which are almost the same level, like a shoulder, like a human shoulder. Okay, and then you have a neckline. Okay, and when the prices break through the neckline, okay, it's basically a trigger for a sell entry or a take profit, right? If you're in the market and you see this formation and it breaks this, it's a take profit, time to take profit, okay? And if you are trading an asset class that can short, then that's where you go short as well. Now, I want to point to you this, okay? When it forms this neckline, you will see that it will also form the fractals over here, right? So when it breaks the fractal, a classic break of this fractal, just now we saw, right? Just now, you remember this move? Okay, higher high, 1, 2, didn't make a new high, then come and break this one. Just now we already saw that this pattern is actually a sell or take profit signal, right? And you will also see the appearance of a fractal right over here. Okay, so in all these reversal patterns, chart patterns, you will see not only a pattern breakout or a pattern trigger, you will always see also a fractal, what do you call that, a fractal trigger, right? And that's why I say fractal is a master key, because if you can see the fractal, you basically can decompose what's next move already. Right, so this is a classic reverse head and shoulders in terms of the bearish pattern. Now, of course, you have what we call an inverted head and shoulders, which is basically a mirror image of the head and shoulders. Okay, of course, this is a bullish reversal. Okay, where the markets make a lower. You see this over here, a lower low. Okay, which defines the head. Okay, and then moves up. Okay, and then comes down. Okay, doesn't break this low. Okay, again, then go and break this neckline. Okay. So this is also, you will see fractals there, right? The fractals will be there for you to read as well. So this is a classic reversal we saw already just now in the first few charts on the higher highs and lower lows, right? So when it breaks it's a reversal signal. Okay, so people of last time when we were looking at inverted head and shoulders, okay, they perhaps didn't realize that these areas, where the neckline is also the fractals. Right, so let's move on. So we have the head and shoulders and the inverted head and shoulders. Okay, of course, double tops. This is a very classic move as well, right? So you have a market that went up to make a high, come back, make a low, go up, but didn't break a high. Again, we say this familiar term, didn't break the high and then come down and break this low. Okay, so a double top basically is a resistance. The market tried this particular price range twice and couldn't break through, right? And then it went down to break the neckline. Okay, the neckline will again, okay, be defined by a fractal. You will see this every time. Okay, so basically the double top is a bit like an M. Okay, it's like an M, right? So when it breaks that pointy thing here, which we call a neckline, you will see a fractal, and that is also a trigger for the stock market. You have to take some profits, okay? And for those of you who are trading futures, you could take a short position if it triggers this breach in the neckline. Okay, so that's a double top for you. And of course, comes after double top is what? You can guess it. It's a double bottom, right? So double bottoms are a great way to recognize when a possible change in trend, right? If you're watching a stock, okay, perhaps it's gone up already and now it's coming back down, consolidating. When should I get in, okay, on the trend, right? So, okay, look for this sign. It has a market tested this price at the bottom twice, okay, almost at the same price, okay, and then when it comes up and breaks this neckline, okay, which will also, again, as I say, be a fractal. Okay, so this W forms a fractal formation, and when it breaks through, it's a signal that market is going to go up. All right, so these are very important as well. Okay, so you have double top, double bottom. Let's see what other reversal patterns do we have. Okay, of course, if you have a double top, you can have a triple top, right? And triple top is even more king. You know, a Chinese feel very king or very strong in terms of the resistance, right? It tested 3 times. The market tested 3 times, and then couldn't break through, okay, so couldn't break through to new highs, as we say, couldn't break through to new highs, come down and break the neckline, okay, and this will be fractals as well. And of course, this will be fractals as well, right? The tops are going to be fractals as well, because you will have, bars which are lower on the left and the right, okay, and similarly here you have the highs on the left and the right which are higher than the fractal. So when it breaks the neckline again, it's a trigger to sell, right? It's a trigger to take profit, okay, after a triple top. Okay, but if normally if the market tries for a fourth time, okay, there's a good chance that it can break through. Okay, a market that tries to try this, okay, because after a long while, okay, what if let's say for example market here, okay, make this long consolidation. What is this again? No, this is a sideways market, right? Okay, before it breaks down, this is. Sorry about that. This is a what do you call that? A sideways market. So if a sideways market breaks through the resistance, then we have what we saw just now, that my EG chart just now, right? So the fourth time we try, okay, note that very careful, okay, because sometimes this could be a breakout of the range, okay? So that's something for you to note, something extra above from what you see over here. Right, let's move on. After triple top, what do you guess? Okay, triple bottom. Because same thing. Okay, so we shall not delve too much into this, right? Same information, hits a support level 3, almost the same price, then breaks this neckline, which is also a fractal. Okay, so if you recognize the fractal buy and sells, okay, which you will do afterwards, you will recognize that this trend is moving upwards. Okay, next, another reversal pattern called a bullish island reversals. This what they call that formations are less common, okay, but it does happen. And when it does happen, you will form this fractal pattern, right? So there are gaps. The gaps basically the market didn't when it traded and it opened the next day, okay, it traded without passing through a certain price range, okay. So when this gaps up, okay, it will also break a bifractal or the up fractal, and it also will what do you call that? Give you a good indication of where the levels are in terms of the buying. Okay, so this is a good indication for a reversal, but it's a very rare occurrence. Okay, if you see these, is number one a confirmation in terms of the classic pattern, and when it breaks this fractal again, it's a confirmation that the markets want to go up. Okay. Of course, the opposite again. This is a bearish island reversal. Okay, this is called an island because it's isolated because of the gaps. Okay, market didn't trade through this price range here, so you left a batch of bars right over here, which we call an island. So when it breaks through this island, and you will see also breaking through a fractal, then you have what we call a reversal to the downside. All right, so those are the classic reversal patterns. Are there more reversal patterns? Yes, there are a lot more reversal patterns that you are care to look at it, okay? But again, I want to emphasize it, re-look at all these classic patterns in the eyes of fractals, okay? That's a technology you want to use in terms of deciphering the classic chart patterns, all right? Now, we're going to go to another set of classic chart patterns called the continuation patterns. What are continuation patterns? Basically, these are chart patterns that predict the extension of the current price direction. So if you see these patterns, okay, then it's basically telling you that the trend can continue to go where the direction it was going after the pattern is finished, right? So let's have a look at what sort of things. Okay, so ascending triangles, okay, basically an ascending triangle is a continuation pattern. So what it does is basically a market comes up, then meets with a very strong resistance at this particular price point, okay? So it goes up, or it got sold down, okay? But every time it sells down, the bottom starts to ascend, right? That's why you call this an ascending triangle, okay? And then when it breaks through this line, okay, breaks through this line, then it's going to continue on its trend, okay? So if you see this on your chart, okay, you see, hey, it's hitting this particular price point coming down, but then the bottoms are actually ascending, okay? This is a continuation pattern for an uptrend, okay? And of course, when it breaks these fractals, three fractals break, then it's very bullish as well when it goes up, right? So it is something you want to look out in terms of the fractal as well. Re-look at it, right? So what about descending triangles? Just the opposite as well. So you have a market that comes down, finds support here, moves up again, finds support here, same price level, moves up again. Okay, but then as it goes up, the highs are getting lower and lower and lower. right? So it's like a triangle that's ascending downwards, right? So once it breaks through this particular support point, right, then it's a continuation of a downtrend, right? And incidentally, all this will be fractals as well. Right, symmetrical triangles. Now, symmetrical triangles are not so clear-cut, right? You can break both sides. So if you see a triangle, and this is quite a common phenomena in the markets as a market goes into consolidation, right? So you form this triangle which is symmetrical. It goes up, then come down, forms this base, and go up, and then you find, hey, how come if I draw a trend line across the tops and the trend line across the bottoms, I see a very nice triangle, which is very symmetrical as well. Now, the breakout of any of the trend line over here is a signal of where the market wants to go. So you can see it's either going to go up or either going to go down depending on the breakout of the triangle, okay? And when it breaks out of the triangle as well, you will see a corresponding break of the fractal as well. Right, so look out for the trend line break and look out also for the fractal breakout. Right, so symmetrical triangle can go both ways. What about an expanding symmetrical triangle? Okay, this is very, very different from here. Right, here it's coming to a single point. Here is actually opening up like a trumpet. Okay, it's opening like a trumpet or megaphone, right? A megaphone, right? So this also can signify two things. It can signify a breakout, okay, in the same trend, or it can also signify a breakout on the other side, okay? So it's very important to follow the trend line break as well as the fractal break as well, okay? But this is a very rare occurrence, okay? When it means by what is a most reliable signal, that means that when it breaks out, okay, it tends to not fail. It tends to really, really move to that direction. So if the market breaks out of a expanding symmetrical triangle on the top side, then it's quite reliable to say that the market's going to go up. Okay, why do I say most reliable? Okay, you see, not all these patterns that you see, don't bet everything, all your money on a particular pattern, right? That's why I say look for confirmation with fractals, okay? Because some of these patterns, okay, can fail half the time, right? If you don't add something in like a fractal, it can fail half the time. Right, so be very careful as well. Don't say, "Oh, I see this." Sometimes, you tend to see what you want to see. So, it's not actually that, but your eyes can see things. Right? So sometimes we imagine things, right? So get confirmation, okay, from fractals, okay. So if you see something like a expanding symmetrical triangle, say, "Wow," you say, "Jose, this is going to be good," right? Okay. Hopefully you see the correct expanding symmetrical triangle, and then you go with it. And then if it is confirmed with fractals, then you will put your case as a stronger case. All right, so this is a good pattern, but rare. Okay, it's a rare pattern, right? Okay, the other more what do you call that, common patterns are what we call the bullish flags and pennants. Okay, so what is this bullish flag and pennant? It comes with this one strong move. Okay, so this is a bullish flag pattern. That means this is a bullish continuation pattern. Okay, it's got one strong move. So if this one strong move forms what we call a flagpole. Okay, then it starts to consolidate. Okay, consolidate, and then looks like a flag. Right, this is like a flag. Okay, this is like a bandera. Okay, and then it breaks through this particular resistance point. So this is if you see a bullish flag like this, then it's tend to be a bullish continuation, right? But also looks for fractal breakout as well, as advised always. Okay, and if it goes down like this, like a little triangle, then it's called pennant. Okay, so it's got this flagpole. Okay, the characteristic of bullish flag and pennants is the flagpole. All right. So this is give you an example here. Okay, sometimes it's not easy to find, but it tends to somehow in this KLCI chart, there's so many of these flagpoles. Okay, and this is a chart from where was this? This is end of last quarter, right? End of last quarter, it did its first flagpole right over here. Okay, then did its second flagpole right over here. So continue the trend and did another flagpole right over here in February. Okay, and broke out again. Okay, so you can see in terms of the KLCI where the flagpoles are. And the flags, of course. Okay, so bearish flags and patterns is just the opposite. Okay, if the market has come now drastically and then start to consolidate and form this look like a flagpole, but this is inverted. Okay, it's right opposite on inverted pennant. Then okay, this is continuation. Okay, the odds are it will continue with the what do you call that, a downtrend. Okay, so let's see. Okay, wasn't easy to find, but I found one example here. This is Harta Lega. daily chart. Okay, market came down very drastically, right? This is way back in end of December of 2021. Okay, and then formed this this bearish flag. Okay, and then when it broke, then it broke down. Okay, but notice over here, right? As we look at this, you can see that it's actually there is a what do you call that? Fractal breakdown over here. There's actually a signal here, which I'll teach you in a short while, right? There's actually a sell signal right over here, right? So even though you may have ridden this short-term trend from end of December right through the middle of January, and you may have caught some nice short-term move over here, but here it's actually asked you to lock in some profits already, okay, right over here. So we're going to learn that shortly. So this is a bearish flag and pennant. Let's see any more continuation patterns. Okay, so those are the basic ones that you have. Now, for those of you who love to read patterns and love to read, okay, if at night you don't sleep so well, I'll go and buy this book by Thomas Bukowski. Okay, 1,000 word pages. Okay, definitely, you know, if you don't learn a lot, you will definitely also fall asleep. But anyway, this is the encyclopedia. This is something to put by the side. If you see something that you don't understand, you can always refer to this Encyclopedia of Chart Patterns. Amazing book, okay? Of course, there are other books on technical analysis by John Murphy. That teaches you chart patterns as well, okay? John Murphy has two very, very classic books that all the people who qualify to become a technical analysis will read this book. These are definitely very good guides to have by your side, okay? It will also help you in terms of the next session, right? So after this session, it's not the end. No, we have another session in August, right? Later, Shane will announce, okay, where we will try to even refine better strategies for you together using the chart patterns, okay? So don't miss the next thing, okay? Now let's dive into the very important thing, how to trade the market trend, okay? You all been waiting for this for the last 45 minutes, okay? Let's go into it. Okay, so let me introduce you to this fractal entry and exit system, okay? What are the features of this system, okay? Simple to identify, okay? You have to be able to look and able to identify the fractal, okay? So it doesn't really require very sophisticated technical analysis software, okay? A basic TA software can show the fractal, okay, and you can recognize it by the eye, okay. Easy to master if you spend 2 weeks, okay. Once after 2 weeks you look at it, then it's so easy already. And what you do is this system of fractal entry and exits will put you predominantly with the prevailing trend, okay. Normally you won't be wrong in terms of where the trend is, okay. You can also catch some early reversals, okay. Just now we saw how to catch the reversals. You can catch those early reversals as well. Now it's very versatile, okay. If you are a short-term trader, you can use this fractal system. If you are a swing trader, you trade across a few days and a few weeks, you can use this system. And if you are a position trader, I'm an investor, you say, all right, I hold this stock, I look at monthly chart, so be it as well. This is also applicable for those of you who are in position trading. All right, so let's move in and have a look. It's very simple. You already have the basics just now. So what is the buy entry? How do you look at a buy entry? Okay, so you look for a bar that has been coming down. It forms a low. Okay, go up and form a fractal. Okay, then come down. Okay, come down. Actually, it needs to come down to form a fractal, right? So you can see here, 1, 2, 3, 4, 5. This is a perfect fractal. But remember this. This C, this lower part of fractal, never breaks A. Okay, familiar with that? Okay, we started with that very early in the slides. Okay, it creates a high, come down, doesn't break a new low. Because why? If it breaks a new low, then the market wants to continue to go on a downtrend, right? It doesn't. The music has changed. The music has changed from downtrend to uptrend, okay? So when it breaks through this particular point, B, okay, which is the fractal, above by one tick, it at least needs to trade above, right? It cannot be same. Why it cannot be same? Because it could form a double top, right? It could form a triple top if it's the same level, right? So give it some room. Give it 1 or 2 ticks. It trades above that. Trades above, not only just trade at the same price. Then you have your signal to go along. Okay, so that's a signal. What about the take profit. Okay, same thing. Take profit is or go short is the market's been going up. Okay, so you say, hey, when should I take profit, man? Okay, so it comes down to B, right? So in a normal market where the market wants to continue to go up, okay, so those who buy on correction, okay, the next move up, it should break the A. It needs to break, but it doesn't, right? So if you bought around this level, okay, and then it doesn't break A and comes back and break B, then it's time to actually exit your position. Okay, take some profits you have if you have ridden the trend to A, right? So anything below B, it must trade below B. Okay, it cannot be at the B. Okay, it cannot be same price as B. Why? Because it can be double bottom or triple bottom as well, right? So so it breaks through B below. Okay, then it's time to take your profit. It's basically the market, the fractal, the trade signal is telling you to take profits. Okay, now let's go and look at some examples. Okay, if I have a chance to go into later into live charts, I'll try to get into it so we can take some requests. Okay, so this Tenaga National, in terms of that, I've drawn these green dotted lines. These are all the Bs, Huh? These are the fractal Bs. Huh? These are the fractal Bs, right? So the very early one, this is at the end of last year, right? December, it actually broke out of a sideways range. Okay, so the first signal in terms of the last 7 or 8 months of move in terms of the Tenaga National, it started around the 10.06 level. So when it broke the 10.06 level, okay, then started to climb. Okay, this is where the buy signal was triggered. Okay, then continue to move up. The next buy opportunity was at 10.62, and you could see that successively there were the signals. And until today, although it flashes some possible reversals here, but it has actually taken it out as well, right? So at this current moment, this was the closing yesterday, July 9th at 14.42. It still displays its bullish rally. It still displays its bullish nature, right? It hasn't broken or hasn't shown any particular lower fractals here to sell yet. Okay, so that's the Tenaga National for you. Let's move on to another example. This is JCY. Okay, hopefully some of you have caught a nice move here. Okay, this is a late mover, of course. It started its move with this. Okay, this is where that is very difficult to recognize. Okay, those of you who are not watching your favorite stock going into a very slow movement, and this stock has been doing this particular range for a long time, right? So the first ever trigger, okay, above this range was at the 27.5 cents level. Okay, then it started to confirm at the 36 cents level. And after the 36 levels, okay, there are successive what do you call that, signals, but there were no fractals. Okay, so the last fractal that showed at 36 was that after that it totally exploded in June to mid of June. Okay, now what? Okay, now very important, right? It has shown this sell take profit level. Okay, so those of you who actually have gone in the market this level, this is where the market says that you really need to lock in some profits. Okay, because I may be going to a sideways trend, or I may reverse my trend for a correction. Okay, doesn't mean that this particular trend is over, but what it's saying is going to take a correction. Okay, so whether you want to jump in the correction together with it, okay, you don't need to. If you are more familiar with the charts, you can see the reading. Okay, you don't have to jump in the correction. You can re-enter. Maybe you re-enter here. Who knows, right? Okay, or it gives you another signal later if it goes on a consolidation, right? It gives you perhaps another classic pattern, and then you can go in with a fractal breakout later, right? So what if it really goes down, right? So you are totally protected right over here. And the market gives you signal. The market gives you hints. Okay, you cannot say the market never told me, okay, that it's going to go down. It shows you hint. You need to be able to read it. Okay, it shows you hints. Okay, so let's move on to another example. Okay, let's look at Bursa Malaysia. Okay, Bursa Malaysia, when did it start its trend? It also started its trend on when? A very, very auspicious day, right? The 18th of December, it had this fractal right over here, which was broken. The second day, okay, New Year already broken already. So at 694, Bursa Malaysia, okay, started this uptrend. Okay, after the sideways trend started this uptrend, continue to confirm at 734, continue to confirm at 750, okay, where it went sideways again, okay, in this period between end of February and the beginning of May, it consolidated, and then again, you know what does the market do when it consolidates and break out of the range? It's going to fly, right? And it did fly, right? After 750, you have a range breakout. Further confirmation at 798, you had a chance to go in here again, right? And here again at 865, you have the chance to get in, okay? Those of you who are afraid of heights, don't know whether you want to get in already, not, but it's like this. You don't get in, it continues to go higher, right over here, 865. You want to go in? No, it goes to 884. You want to go in? No, it's 889. 920, 910, you still want to go in? Okay, as far as the chart is concerned, right, it's still on the bullish. Okay, it hasn't shown any bearish sell signal yet. So in terms of looking at this chart, okay, whether it's Bursa Malaysia or whatever, okay, it's still bullish, right? Okay. Okay, so this top glove one is for you to practice. Okay, I've written some thing. This is way back in 2020. Okay, this may trigger some memories for a lot of you. Okay, and for your clients as well. But this for practice. Okay, so I shan't go through this. Okay, I want to go into the sectorial indices. Okay, so please practice and look at this as examples for reading. Okay. This is again top glove. Okay, so I just want to look at some of the sectors. Okay, so why do you want to look at sectoral indices? Okay, so basically it depends on how you look at markets. Okay, do you look at the market at the top down basis? Do you pick your stocks from top down? Okay, so from top down, of course, you look at the sector, whether the sector is bullish or not, or whether the sector has selling signals or weakness or not. Okay, so after looking at the sector, you feel that, wow, this sector is still looking good. Then you look at the stocks within the sector. Okay, so if you're doing top down, then you go and look at the signals in terms of the sector and see whether it's giving you the correct signals. It's still up signals, then okay, technology stocks are still bullish. So then you go and pick your stock. That's top down. Now you can do it the other way. You can do, okay, identify using technicals to see certain stocks, okay, portraying certain of the classic patterns or the fractal breakout, and you say, okay, this particular stock, which sector does it belong? Then you go into the sectoral index and look and see whether the sectoral index actually is bullish or not. Okay, so if you have signals that's opposing each other, right? You have a stock that's like, okay, looks like it's interesting one to go up, but the sectoral index is not looking good. Okay, maybe that kind of a non-conformance or non-congruence in terms of the signal. Maybe you say, okay, maybe not. Let me look for some congruence in terms of once the index, technology index picks up again, okay, or shows, and then I'll go in on that. Okay, so that's two ways to approach it, top down or bottom up, in terms of even selecting stocks using charts. Right, so this is the technology index. You can see right over here, right, it's displaying a possible pullback. If it breaks this, then it's going to do a deeper correction. Okay, as it is now, it's still trying to pull back. So see whether it forms a fractal right over here. If it forms another 2 weeks, this daily charts. If you form another 2 days, okay, because this is only updated until yesterday. So it forms 2 bars here, forms a bifractal and breaks out, then yes, the technology index stocks are still bullish. So now let's move on to Bursa Malaysia properties. Properties, how are properties looking? Okay, possibility of a reversal right over here, but it's not triggered yet. Okay, but you have two. Now you have a bracket over here. You have a top. Okay, if it breaks this, then it perhaps wants to continue to be going up. Okay, at best it should move above this high as well to continue the bullish sentiment. But if it breaks below there without breaking the high, then perhaps the property index or the stocks within the property index will take some correction, right? And talking about correction, in the next session, I'll share with you how to read whether this correction is actually the end of the trend or is just a correction. Okay, so that's the next showing. Make sure you show up. Okay, bring your friends as well, all your advisors. Okay, Bursa Malaysia construction. Construction, how? Wow, construction still looking like, you know, it's still drinking what do you call that? Some bullish soup here. Right, still looking very, very bullish, but keep watching here because it's kind of like go sideways already. See whether it forms any down fractals or not. Okay, so now you know how to read the down fractals. You are able to know when the markets are going to take a correction. So utilities, how utilities? Okay, of course, right over here there was a sign of taking profits. So those of you who are in utility stocks, you probably will lock in some profits over here. But once it broke again above this, which is the 1877.5 levels, excuse me, then it's saying that, hey, I want to go up higher, all right? So there's still one chance in terms of the Bursa utilities, in terms of the bullish factor. Okay, plantation not so good, right, in terms of looking at it, but this is a good exercise in learning to see where the market turns, right? So in terms of end of December last year, 2023, right, markets actually started to move. Okay, I didn't draw these bullish lines, but you should be able to see the bullish move right over here, right? So there's a bullish move over here, broke out. Okay, so these are plantation stocks, started to move up, and when it really actually peaked around the mid of May, right? And then the index started to go down. And okay, so likewise, the stocks within this plantations index will take a correction. But this is quite a deep correction, as you can see right here. It's already gone back to where it started in December of last year, right? So that's also because palm oil prices have still continue to consolidate, still continue to find a direction, a strong direction. So as it is, it still looks like it's trading in a sideways trend, right? So yeah, so this is still looking, now you see this sell signal right here. So you should have locked in your profits for your plantation stocks right over here. This is further confirmation that the trend is still continuing to go down. And today, if it breaks this, yesterday it did the 6932 levels, then it's saying basically, hey, I'm still on the downtrend. Right? So I leave you with a few other charts for you to practice on, but I want to say this first, okay? Let's say you initiate a trade on the long side. Where do you put your stops? Okay, so this is a slide that you want to refer to where to put your stops. You can put two places. You can either put it at C, below C, or you can put it at A. Okay, so A is the more aggressive stop. That means if it breaks A, then the market is going to totally go on a downtrend. Okay, so this is where you put the stop. Okay, look at this particular slide. Okay, so where are we? Okay, so yeah, how to master the fractal signals. Okay, this is actually a picture from my bathroom. Okay, I drew this pattern on my bathroom mirror, right? Because my wife said she wanted to learn trading. Okay, so again, what I teach you is what I practice as well, and I teach my own dearest people as well, right? So I'm not BS here, right? I'm not teaching you something I don't use, right? So this is actually on my right side of my mirror. You can see my shower right at the back. Okay, so you need to master. You got to see it, lah. You got to see until you what do you call that? In your eye. So practice until you can see this signal. Okay, I am going to pass you back to Shane for questions. Okay, Shane, pass it back to you for questions.
All right, thank you so much. So we have overrun the session by 1 minute, so we
Oh my God.
yeah, we just do a few questions, maybe limit to 2 or 3. All right. So if any question to ask our speaker David today, please write them in the chat box. So the first question I see on my screen is that, David, do this fractal pattern works for daily and hourly chart as well? So this question comes from O.
Oh, yes, most certainly, right? As we said, fractals repeat itself in infinite scale, all right? So as I said just now, if you're looking at the hourly or even the daily charts, then you extrapolate. The trend will be, if it breaks a fractal, it'll be 20 times that trend, okay? So if you're looking at daily trend, then if it does a breakout, it signals a trigger to buy or sell, then that particular trend will last for the next 20 days, right? And if it's hourly that you want to trade within the week, right? So the hourly chart, if it triggers a buy or sell signal, then that particular signal is good for about 20 bars. That means the next 20 hours, which means that if a daily you have like 5 hours of trading, then maybe over the next 5 days. I hope that answered your question, O.
All right. Can you revisit the JCY chart? Does it seem like a flag pattern?
Okay, let me share you a live chart some more. Okay, let's not look at static charts. I'll stop sharing my screen and show you a live chart. Okay, let me show you a browser. Where's my browser? Okay, browser, right? Okay, here. Okay, can you see the chart? JCY. Let's see. Let me search for JCY. Ah, here it is. Shane, are we seeing our charts?
Yes, we are seeing a trading view.
Okay, cool. So which one? This one, okay. So now, okay, this you're looking at this, right? Okay, the astute eye, okay, can see this as a what do you call that? A flag, right? This is the flagpole and this is the flag. Okay. Now, yes, can this be a bullish continuation chart? Yes, right? When it breaks this, okay, so if I draw a trend line, okay, very nice eye you have, okay, you spotted it very nicely. You have a trend like that, right? And then again, okay, a trend like that, okay. I wish I have a price to give you. Wow, you're very nice eyes, okay. Okay, right over here. So it could be a continuation of the trend, yes. And when does it confirm? It confirms when it break where? It confirms when it break this particular line, okay, this particular fractal. And where's that fractal? The fractal is right over here, right? So it's formed already. 82, anything above 82 is confirmation that this flag is broken. It's already broken. You can see over here slightly, right? But the fractal will confirm, again, double confirm that the trend is going to continue upwards. Okay, fantastic eye. Back to you, Shane.
All right. Thanks, David. So how about newly IPO counters like UUE Holdings? Where can we find the entry if it's a new IPO? Is it based on hourly chart? So that
okay,
is the question.
Of course, if you don't have enough data, it's kind of difficult to read. Okay, the only way you can see it is okay. Where is that? Okay, a hint lah. Okay, where is that particular stock in the sectoral index? Okay, since we can't analyze it, it's just nice. You know, new IPO, where got chart, right? You only have a few days chart, okay? So you can read intraday, but that's one also intraday, right? So the only reference that I can give you a good way to look at it is, where is this particular stock, okay? Of course, analyze your fundamentals and valuation, okay? Charts are good for timing, okay? Remember, I'm not saying that you should not look at your fundamentals, right? Good fundamentals, okay, look for entry. Then one of the guide is, okay, don't go top down. Since you can't analyze the stock specifically, I'd suggest look at top down. Okay, it's a sector that it's this particular stock that's going to IPO in a bullish mode. If it is, then perhaps it's better chance. Okay, of course, please analyze the fundamentals as well. Back to you, Shane. I hope that answers the question.
All right. Let's do one last question from Taufik. How do you see TSH stock right now?
TSH. Okay, let's see whether I can go and find TSH for you. TSH. Is it this one? TSH Resources. Okay, right. Let's click on it. Let's see what is going to show. Okay, this is daily chart. All right, interesting. Okay, so what do you see from here? Let me just okay, what do you see from here? So we had this stock coming up from a range right over here, right? Then form a spike up, okay? Then consolidated, again range here, okay? Of course, this phase is where you want to lock in some profits, like if you bought early, right? And then there's a trigger, okay? So the last signal was right over here. Okay, right over here, where it was a buy signal right over here at 117. Okay, those of you who got in early, okay, at 117 will see some nice profits. Okay, so now the question is this: hey, if I got in at now what? Okay, now what? Okay, it hasn't come to form a sell fractal yet, a red fractal on the daily. But what you can do is this: if you want an earlier signal, what do you do? Okay. You say, okay, I want to take profits a bit earlier. Now you need to go into what we call, you need to go one time frame lower. Okay, you go into 1 hour and you see whether 1 hour shows you anything or not. Okay, so the 1 hour chart, okay, if it's anything, but realize that a 1 hour chart is a shorter term chart. Okay, it's basically defining the range in the next couple of days, right? So this range, when it started to consolidate, okay, it did this, come down and form this sell fractal over here. Continue to consolidate, okay, right over here, there's a sell fractal here at 124, okay, then it started to break this, right, and then it started to consolidate. It's okay. So if those of you who bought this particular TSH stock and you were trading it for the shorter term, at this particular price point 124 or lower, it was time to kind of like lock in some profits and wait for the next signal. Okay, as it is, as it broke, okay, and there was last Friday as well where it broke. Okay, it continued to move downwards. Today is still consolidating. Okay. Now, one thing is this I want to point out. If you see a stock with the prices, a lot of these level bars, okay, perhaps it can be some liquidity as well. Maybe the lack of liquidity makes it a lot of these flat tops and flat bottoms, right? So ideally, okay, you should have nicer classic patterns in terms of the charts, okay? But sometimes you see these charts because it's not so liquid, okay? It's not so liquid, right? Or the attention hasn't come to this particular stock yet. So you see a lot of flat tops, you see a lot of flat bottoms, okay? Not a classic like a daily chart like that. Okay, daily chart. Even here, a lot of flat tops. Okay, but if you see another extremely liquid, let's see what's okay. Let me take Hartelager. Okay, so this is a daily chart. You see the chart patterns are a bit different. It's more classical, right? Because it's got deeper liquidity. So I hope that gives you a view of that particular stock TSH. Back to you, Shane.
All right, so let's do this question very quickly. This is from Jack from Hong Leong Investment Bank. Would you say fractal is better for swing tradings?
Okay, depends. If the chart is good, okay, that means it's got nice liquidity and lines formations. Okay, swing trading, what it does is swing trading lets you ride the trend longer. Although swing trading is short term, okay, you're talking about a trend within 7 days or 5 days or 7 days. Okay, but at least when it starts to move, okay, you can move that particular time period for 5 days or 7 days. You manage to lock in that time period, okay? But of course, you do swing trading, you miss position trade lah. So it depends on your risk as well, okay? Some of you don't want to take so much risk or don't want to take such a large position for a long term. Then swing trading is one of the good ways compared to day trading, right? Day trading can be even tougher, right? So swing trading is what I consider a good trade-off between long-term position holding, okay, and day trading. Okay, so swing trading is great, and fractals definitely work for swing trading. Back to you, Shane.
All right, thank you so much, David. So that's all the time we have for question and answer today. So thank you so much, David, for sharing with us how do we read and interpret advanced charts pattern, as well as learning a new thing today, which is fractal. All right, so the next session with David is going to be on 13th of August. So if you want to attend the next session by David, please mark your calendar, 13th of August, same time, 12:45 to 1:45 p.m. All right, so we look forward to seeing you in our next event. So bye-bye, everybody. Hope you enjoyed the session today.
Take care and good trading.
Thank you.